What's up, guys? So I'm doing a video just mainly on fair value gaps to help you understand how to see them better, train yourself to be equipped for when they do approach. So I'm not going to really go through the whole explaining why I had just done this, because if we're doing the fair value gap lesson only now, it means you're at a point where you understand how the process goes: buy side liquidity, equilibrium, and sell side liquidity. So now this is interesting. This here this here is the whole setup. Now this is gold. Okay, reason being, we we break the sell side liquidity level here. Okay, we trade underneath it. Now this is our confirmation that we have a break here. Okay, that's our confirmation we have a break here. Now in theory, everything 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 that happens after this breaks and closes under there is our indication that our break has happened. Now, I need you to focus, because now this is where the fair value part comes in. Do you see on this 3-minute candle here, right? On this 3-minute candle, we we come in here, we break the sell side liquidity, and we close under. So this movement here is our confirmation of the break. Now, this is our fair value gap. Now, this is where it gets exciting. Like, I'm literally getting exciting. Like, I mean, did I just my English there? I'm literally getting excited. So now, it's literally art. It's art. That's the only way I can explain it. Okay, now here is our break on sell side liquidity. We trade underneath it. We trade underneath it. Okay. Now, instantly, when you get this candle here, you put this horizontal right here, just to help your eyes. Okay, just to help your eyes. But now the idea is everything that is underneath this candle here is the fair value gap. Why? Why is it the fair value gap? Okay, because we broke the sell side liquidity with this candle right there. Okay, we broke it. Now look at how artistic this is. This is like it just gets me excited to see how perfect the structures, plan out. Okay, so I'm just gonna label everything, and I'm gonna send pictures of it, and I'm gonna send the video. Fair value gap. And now the fair value gaps. Ooh, did I spell value wrong? The fair value gaps, they're so important because they help us understand how we can enter, where we should enter, where our stop loss should be. So now, realistically speaking, if you had sold this here, okay, realistically speaking, your stop loss has to be above this, because this is our move initially starts here. So now, if you see how beautifully the chart respects this area, it comes near it, but it doesn't touch it, doesn't touch it, doesn't touch it, trades underneath the sell side liquidity, and then bang, it takes off, it takes off, it takes off. And it's gone into NOI now. So yeah, interesting. That's interesting. The fair value gap is different from sell side liquidity, because the fair value gap is where we can actually see where our stop loss should go, where the move kind of begins for us. Gosh, I should leave that there. I'm just gonna say FAG. Fair value gap. Okay. Now we're gonna do another example. Okay, so now we're coming into NY. 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 Edges. Oh, thanks, Sinatra. Okay. And our highest point in London was there and there. Coolio. So now we can put out equilibrium, and we'll just, okay, no, we won't steal from anywhere. We'll put it in here. Cool, so we kind of have our level set now. We'll take that there. Okay, I'm gonna make the FAG color different so it don't confuse us. I'll make it a bit thicker as well, just so it don't confuse us. Okay, so now what do we have here? Now I love this right here. Okay, now this is where it's interesting because this is our low in NY. Okay, and now we could also use DXY, but now we're just strictly using the pair. So we go into the sell side liquidity, but we don't confidently break it. You know, we go below it, but the candles keep on coming back above and closing. Now this is where our trade is, right here. This guy right there. This is our trade. This is our trade. This is our trade. Okay, because with this candle, it's the lowest point. It's the absolute lowest point where it had gone lower than the level and traded above. So this is a beautiful, this is where the money is, right? This is our sweet spot right here. Right here this is the level where we say it is not going to go below there. So now we get this. So now let's say you had marked this level down, right? And now you're thinking, okay, damn, how am I gonna enter on this? Well, this move comes down here. Okay, it literally says, hey, you have another chance to get in. Now, I'm telling you, this would have been easy to see. You would have had your level, and you could have literally entered on it with a what? With a 50-point stop loss, basically. And what could have we done from there? We could have traded it to the equilibrium and beyond. Now, this is a beautiful way to understand the fair value gap because it breaks into our liquidity. It dips into our pool of liquidity, right? This is our pool of liquidity. So once the trade dips in here, it's kind of telling us, okay, we have taken this area because we want to perform something. We want to do something. We want momentum. We want to do something. The price wants to move. So it had purged this area. Okay. Now, with taking this area, it had given us a low. Now, this is what we call a draw on liquidity. It had made a temporary low because it's literally a spike. Now, this spike is so crucial because this is our fair value gap. Because if we have the spike in this candle, is our confirmation to tell us that this is our fair value gap and we can buy this anywhere, but here's our stop loss. So literally, you could have bought it there, we would have taken it up there, and now here's another trade. Literally, here's another trade. So our equilibrium, it's another pool of liquidity. Okay, we buy into it, we break, we go below it. Okay, not good enough. It's not sufficient. We trade lower, we buy, we close above. Now this is the key takeaway. We close above. This candle here is the key because this candle here took on the equilibrium. It jumped into the pool of liquidity and said, okay, we're holding it. So now here's another fair value gap. Right there. Right here. Enter. Enter. And where do you take it? To the buy side liquidity. Literally. Here, fair value gap, entry, buy side liquidity. Up there. Okay? Now look at all, like, literally there's so many chances in a day to trade. Okay, now in our buy side liquidity, a rejection, okay, it's literally saying to us it doesn't want to trade. It doesn't want to trade higher. It's telling us, bruv, look here, we don't want to trade higher. And we got another fair value gap forming. Like, why? Look at this. This is really simple. Here's our buy side liquidity line there. Okay, we trade, we close below it instantly. Here, that's when your brain goes tick. Okay, we jumped into the pool of liquidity to do something. It rejected the break, and when it rejected the break, it went above and it closed, and the highest point was here. So now that's your fair value gap. You can sell this anywhere. Okay, I'll remove this. No, I'll have to keep it there. Let me just make it a different color again. Okay, You can sell this anywhere, and your stop loss needs to be about there. And now, where's the trade to? To the equilibrium. Like, literally, there were so many opportunities here, right? There was a fair value gap. Here, I'm gonna, what can I use to signify where we had a fair value gap? Okay, I'm gonna use a light bulb. Can I find a light bulb? There we go, fair value gap. Here, we had one. Here, we had one. Here, we had one. There. Four beautifully safe ways to make money on those fair value gaps. Literally, four beautifully and safe ways to make money. So yeah, that's all we're gonna do for this video on fair value gaps. We're gonna, if you guys are still struggling with the concept, don't worry, we're gonna jump in it more. But I'm gonna post this video in the group and also send this image. Well, cheers guys. See you on the charts.